Here is something most people over 65 will never hear from anyone with a financial stake in the answer. There are at least 7 fees quietly draining your money every single year that you are completely within your rights to stop paying. 7 of them. And before we go any further, I need to clear up one massive misunderstanding right now, because it is the exact thing that causes most people to tune out and unknowingly leave hundreds, sometimes thousands of dollars sitting on the table for someone else to pocket. When people see a video like this, they make one of 2 assumptions, and both of them are dead wrong. The first assumption is that this is only for seniors who are barely scraping by, counting every single penny. So if you are reasonably comfortable financially, you assume none of this applies to your situation and you scroll right past it. The second assumption is the opposite. People figure this must be some sophisticated money strategy aimed at people with substantial wealth. So if your main income is a monthly Social Security deposit, you assume it is way over your head and not worth your time. I need you to set both of those assumptions down right now, because they are both wrong, and those 2 false beliefs are costing real people real money every single day. This list is for both of you. Whether your entire monthly income is one Social Security check that arrives on the 3rd of the month, or you are managing a pension, a well-funded retirement account, and a home that has doubled or tripled in value since you bought it, there is genuine money on this list with your name attached to it. Some of these fees hurt the lower-income retiree the hardest. Others quietly bleed the comfortable middle-class retiree the most. And I am going to be completely upfront with you on every single one about which group it impacts, how it works, and exactly what you can do about it. Because nobody watching should be able to sit back and say, this one is not for me. Here is the honest pattern I have watched play out over and over again. Seniors at every single income level are losing money on these fees. They are just losing it in different ways through different channels for different reasons. And if you caught my last video, the one covering the 5 bills that seniors are legally exempt from, this is the video you asked me to make. So many of you reached out and said, that one actually saved me money. Now please show me what else I am paying that I do not have to. Well, here it is. The next 7. And the reason almost no one ever tells you about these fees is honestly pretty simple once you think about it. Every single person who collects one of these fees from you makes money the moment you keep paying and loses money the moment you stop. Your bank is not going to call you up on a Tuesday morning to mention that you could eliminate that monthly charge just by asking. The store running your transaction is not going to lean over the counter and volunteer that the surcharge they just added is one you could have sidestepped entirely. The firm managing your retirement savings is not going to open the conversation by pointing out that their quiet little percentage is costing you tens of thousands of dollars over the course of your retirement. Nobody who gets paid when you pay is ever going to help you stop paying. That job belongs to me. And after today, it belongs to you. Here is the single idea I want you to carry through this entire video, because it connects all 7 of these fees together. Being legally allowed to avoid a fee and actually not paying that fee are 2 entirely different things. Nobody removes these charges for you. Nobody mails you a reimbursement check for years of overpayments you should never have made. You have to know the fee exists, and then you have to take one specific action to make it disappear. That gap, the distance between being allowed to stop and actually stopping, is precisely where billions of dollars silently leave senior pockets every single year. So stay with me through all 7, because the final 2 on this list are the ones that quietly do the most damage of all, and they are the 2 almost no one talks about. My name is Marcus Graves. I am an enrolled agent, which means I hold a federal license to represent taxpayers directly before the Internal Revenue Service. I sit across the table from the IRS on behalf of real people, and I am going to share with you the single most painful pattern I witness repeatedly in my work. It is not the people trying to game the system. It is the honest ones. The careful, decent people in their 60s, 70s, and 80s at every income level you can imagine, who spend year after year paying fees and charges they never had to pay simply because no one ever pulled them aside and told them they were allowed to stop. That is the most expensive kind of financial mistake there is, because it is completely invisible. There is no warning letter. There is no penalty notice waiting in your mailbox. There is just a small, steady trickle of money leaving your account every single month, money that never had to go anywhere. So let us fix that right now. 7 fees, plain English. Exactly what to do about each one. Let us get into it. Fee number 1, your bank fees. And I want to be clear here. This is not one fee. It is several of them stacked directly on top of each other. I am talking about the monthly maintenance charge, the overdraft fee, the paper statement fee, the out-of-network ATM fee, and even what some banks quietly call an inactivity fee. Here is the truth your bank would genuinely prefer you never stop to think about. That monthly maintenance fee, which often runs $10, $12, sometimes $15 a month, is not some law of nature. It is not a government tax. It is a charge the bank simply decided to attach to your account. And it is a charge that nearly every major bank will waive the moment you qualify for the right type of account. Most large banks offer a senior account or a 62 and older account that drops that monthly fee entirely. Many of them will also waive it simply because your Social Security check is being directly deposited, which you are almost certainly already doing anyway. So that is $15 a month, $180 a year, walking right out the door for absolutely nothing. Now, who does this help the most? It helps everyone, but the lower income senior takes the hardest hit from the overdraft fee specifically. $35 every single time your balance dips below zero by even $1. And in some cases, the bank will hit you with that charge 3 or 4 times in the same day. I have personally watched a senior accumulate over $100 in overdraft fees because of one $5 shortfall. And here is the part that most people were simply never told. You are allowed to turn that off. You can notify your bank in writing that you are opting out of overdraft coverage. From that point forward, any transaction that would push your account into negative territory simply gets declined at the register, quietly and cleanly, rather than triggering a $35 penalty each time. Your action for this one is a single phone call. Contact your bank or walk into a branch and ask for 3 things by name. First, move me to your no-fee senior account. Second, please waive my monthly maintenance charge. Third, opt me out of overdraft coverage completely. If they refuse to do all 3, I can promise you there is a credit union or an online bank somewhere nearby that charges none of those fees and would be very glad to have your business. That is fee number 1. Fee number 2, the credit card surcharge. This one is going to frustrate you once you fully understand it because it is being quietly added to your purchases and most people never even register that it is happening. You have seen it, even if it did not fully land at the time. You go to pay and there is a small line on the screen or the receipt that says something like a 3 or 4% fee for paying by card. Here is what you need to know, and this is one of the very few moments in this entire video where the word illegal genuinely applies, so I am going to use it precisely and carefully. A business is not permitted to add a surcharge when you pay with a debit card. That is off limits everywhere in this country. If a merchant charges you extra to swipe your debit card, they are violating the rules, plain and simple, and you are entitled to say so. Credit cards work a little differently. A surcharge is permitted in most states, but it is capped. It cannot legally exceed what the card actually costs the merchant to process, and they are required to disclose it clearly and post it before you pay, not ambush you with it after the fact at the register. And in certain states, surcharges on credit cards are restricted further or banned outright. So here is where the money goes straight back into your pocket. You can sidestep this charge almost every single time, and you have 3 straightforward ways to do it. Pay with your debit card, where the surcharge is not allowed at all. Pay with cash, and in many cases, you will actually receive a small discount for doing so. Or simply and politely ask the merchant to remove it, because a lot of small business owners will waive it on the spot rather than risk losing your sale over $1.50. On its own, this one feels minor per transaction, but added up across a full year of groceries, prescriptions, gas, and occasional restaurant meals, and it becomes genuinely meaningful money. And it helps every single person watching, regardless of income. That is fee number 2. Fee number 3, your utility, phone, and internet bills. There is an entire stack of help buried in here that seniors leave unclaimed every year, mostly because they assume they earn too much to qualify, when very often they actually do not. Let me walk you through the major ones. First, there is a federal program called LIHEAP, the Low Income Home Energy Assistance Program, and it helps cover your heating and cooling costs. The income limits are significantly higher than most people assume, so please do not count yourself out before you actually check your eligibility. Second, many electric, gas, and water companies run their own senior rate or fixed income discount programs. And here is the catch that costs people money every year. They almost never advertise these programs. You have to call and ask for them by name. Third, there is the Lifeline program, a federal benefit that reduces your monthly phone or internet bill for those who qualify. Now, here is the one that benefits absolutely everyone, regardless of income level, and you can do it tonight at your kitchen table. Pull out your phone bill and your cable or internet bill and go through them line by line. You are going to find charges with deliberately vague, official-sounding names. A regulatory recovery fee, a paper billing fee, charged to you simply for the privilege of receiving a statement in the mail. An equipment rental fee on a modem you have been leasing at $15 a month for a decade, when you could have purchased that same modem once for $40. And then the oldest play in the book, your introductory rate expired quietly, your bill climbed by $60, and no one said a word to you about it. Here is your action. Search the phrase LIHEAP plus the name of your state. Call your utility company directly and ask them, word for word, do you offer a senior or low-income rate? And am I currently enrolled in it? Then spend 15 minutes going line by line through your phone and internet bills and call to challenge anything that is not a direct service charge. When they push back, use these exact words, I am thinking about canceling. Watch how quickly you get transferred to the retention department, which suddenly has a far better price ready and waiting for you. The assistance programs help the lower-income senior most. The bill audit helps every single one of you. That is fee number 3. Fee number 4, hidden overpayments inside your Medicare. This one is really 2 completely separate overpayments living inside the same category, so listen closely, because this one quietly costs people a significant amount of money on prescriptions. The first piece is brand new, and most seniors are still completely unaware it exists. Starting now, there is a hard cap on what you can be made to pay out of pocket for your covered prescriptions under Medicare Part D. For the year 2026, that cap sits at $2,100. Once your out-of-pocket drug costs reach $2,100 in a single calendar year, you pay absolutely nothing for your covered medications for the remainder of that year. Not a reduced amount. 0. If you take expensive medication and you are used to being hit hard at the pharmacy counter throughout the year, that cap is genuinely life-changing. And I can promise you, the pharmacy is not going to stop and walk you through this. There is also a program now that allows you to spread that amount across even monthly payments rather than absorbing it all at once early in the year. The second piece is aimed primarily at lower and modest income seniors, and it is enormous. There is a program called Extra Help that eliminates your Part D drug plan premium entirely and brings your copays down to just a few dollars per prescription. And there are programs called Medicare Savings Programs that will literally pay your Part B premium for you. Keep in mind that premium is now over $200 a month. That is real money landing back in your account every single month. Now, these last 2 programs do carry income limits, and I am not going to pretend otherwise. But the limits are higher than almost everyone assumes, and the assets test is more generous than most people expect. Even the comfortable but not wealthy retiree should absolutely check. Here is your action, and the best part is that it costs you nothing. Call your state health insurance assistance program, known by the letters SHIP. The counseling is completely free, it is unbiased, and they are not trying to sell you anything. One phone call will tell you exactly which of these programs you qualify for, and they will even help you move to a lower-cost drug plan during open enrollment. That is fee number 4. Fee number 5, IRS fees and penalties. You may not actually owe this one, sits squarely in my professional lane, and it is one that almost nobody outside of my field will ever sit you down and explain clearly. Let me give you the specific ones that hit seniors the hardest. The first is the underpayment penalty. The IRS expects you to pay your tax steadily throughout the year, and if you fall short, they pile a penalty on top of whatever you already owe. Retirees get caught by this constantly because the moment you stop receiving a regular paycheck with taxes automatically withheld from every check, it becomes very easy to fall behind without realizing it at all. But there is something called a safe harbor, a threshold that, as long as you stay within it, makes that penalty vanish completely. As a general rule, if you pay in at least 100% of what your total tax bill was in the prior year, you are protected, even if you end up owing more this time around. We can set that up cleanly by having the right amount withheld directly from your Social Security or your retirement account distributions, so that you never trip that penalty again. The second is the missed required minimum distribution penalty, and this one used to be brutal. Once you reach age 73, federal law requires you to withdraw a minimum amount from your traditional retirement accounts every year. If you forget, the penalty used to be a devastating 50% of the amount you should have taken out. It has since been reduced to 25% and just 10% if you correct it promptly. But here is what almost no one ever learns. You can ask the IRS to waive that penalty entirely. You file a straightforward form, it is called Form 5329, and you attach a brief written explanation that it was an honest oversight and that you have already withdrawn the money to correct it. The IRS grants that forgiveness far more often than you would ever expect, particularly on a first offense. Which brings us to the big one that applies to almost everybody. If you ever get hit with a penalty for any reason, you can request something called first-time penalty abatement. If you have a reasonably clean compliance history, one phone call asking for it by name can wipe that penalty off your account entirely. The IRS will never volunteer this information to you. You have to know to ask for it specifically. The third one is the simplest of all. Never, ever pay a fee to receive your own tax refund a few days sooner than normal. Those instant refund and refund advance products are just short-term loans against money that is already yours. You should never have to pay anyone to borrow from yourself. And one final point, because it genuinely matters. Even in a year when you truly cannot pay the full tax bill, always file your return on time anyway. The failure to file penalty is roughly 10 times more punishing than the failure to pay penalty, and the IRS will happily set you up on a payment plan to work through the balance. This one benefits every taxpayer at every income level, and it is precisely what an enrolled agent handles every single day. That is fee number 5. Before I give you those last two, the ones that quietly cause the most damage, I want to put something in your hands that pairs perfectly with what is coming. Everything so far has been about fees you can stop paying, but there is an equally substantial amount of money sitting on the other side of the ledger on the deduction side, tax breaks that most seniors over 65 simply never claim. So I put together a free checklist for you. It is called the 5 tax deductions seniors must claim before 2028. It covers the largest senior tax breaks that are about to disappear, including the new senior bonus deduction that can reduce your tax bill by $4,000 or $8,000 for a couple, along with exactly how to claim each one and the deadline before it expires permanently. It is free. It is written in plain English. You can print it out and check off one line at a time. Head to marcusgraves.com/checklist. Let me say that one more time, marcusgraves.com/checklist. The link is in the description below. Go grab it now before these last 2 fees because they are the ones that sting the most. Fee number 6, the fees slowly draining your investment and retirement accounts. This is the one the entire financial industry has the most powerful reason to keep you from fully understanding. And it is designed practically by architecture to stay invisible. If you have someone managing your investments, there is a very strong chance they charge you what is called an assets under management fee. Commonly, it runs 1% per year of everything you have invested with them. Now, 1%. That sounds like almost nothing, does it not? Let me show you what it actually looks like in practice. If you have $500,000 invested, 1% is $5,000 a year, every single year, whether your portfolio grows, shrinks, or does absolutely nothing. And sitting underneath that, the specific funds they put you into typically charge their own separate fees on top, buried inside something called the expense ratio, which you will almost never see spelled out on any statement you receive. Add those two layers together and run them across a 25-year retirement, factoring in all the growth that money would have compounded to had it stayed working for you instead of flowing out the door, and that one quiet percent can cost you well over $100,000. That is not a typo. $100,000 or more drained by a fee most people never even see because it is skimmed automatically before the statement ever reaches the mailbox. Now, I want to be fair here. I am not telling you to fire your financial advisor tomorrow morning. And I am not suggesting that good advice carries no value, because it absolutely does, especially when markets get turbulent and you need someone steady to help you think clearly. What I am telling you is to know your actual number. Call whoever manages your money and ask them one direct, specific question, and do not let them sidestep it. What is the total percentage I am paying every year, including your fee and all the underlying fund fees? All in, combined? Make them give you the real answer out loud. Then go compare it. There are excellent, straightforward, low-cost index funds that charge a tiny fraction of 1%. There are also fee-only fiduciary advisors who charge a flat, transparent fee rather than a percentage of your balance, and who are legally obligated to put your interests ahead of their own commissions. And if you were ever talked into an annuity that you have quietly come to regret, please do not touch anything before you ask specifically about the surrender charge, because that is another fee with very sharp teeth. This one hits the comfortable retiree hardest because the more you have managed to save over your lifetime, the more that silent little percentage is costing you with each passing year. That is fee number 6. And for many of you watching, it is the single most expensive line in this entire video. Fee number 7, the probate fee that eats into your family's inheritance. This is the one that is not really about you at all. It is about the people you love and what you leave behind for them. Here is what most people do not realize until it is far too late to do anything about it. When you pass away, if your accounts and your home are not structured correctly, your estate may be forced through a legal process called probate. And probate is slow, it is public, and it is expensive. Between court costs, legal fees, and administrative expenses, it is entirely common for 3 to 7% of everything you spent your whole life building to be consumed before your family ever sees a single dollar. And it can tie up the entire estate in court proceedings for the better part of a year while your children are still grieving and still managing their own monthly bills. Now, here is the good news, and the part that costs you almost nothing to address. Most of your money does not have to go through probate at all. Your retirement accounts, your bank accounts, and your investment accounts all allow you to designate a beneficiary or add what is called a transfer on death or payable on death instruction. When you do that, the money passes directly to the person you named quickly and privately, bypassing probate and every single fee attached to it. So your action today, and it is completely free, is to check the beneficiary listed on every account you own and confirm that it is filled in and current. A blank beneficiary field, or one that still lists a former spouse or someone who has already passed away, is exactly what pulls an entire estate straight into probate. Now let me add the tax side of this because that part falls directly in my lane. When your heirs inherit your home or your investment accounts, they generally receive what is called a step-up in basis, which can eliminate most or even all of the capital gains tax on decades of growth. That is a genuine gift written directly into the tax code. But a traditional IRA is different, and people get this wrong regularly. Your heirs are now required to fully withdraw an inherited IRA within 10 years, and they pay income tax on every single dollar as it comes out, very often during their own peak earning years. So what you choose to leave and the structure in which you choose to leave it has a direct and significant impact on how much your family actually gets to keep. For the legal documents themselves, a will or a trust, please do consult a qualified estate attorney because that is their specialty and it is genuinely worth every dollar. But confirming your beneficiaries costs you nothing and is quite possibly the single highest value 15 minutes most of you will spend all year. That is fee number 7. In every single case, the money is sitting right there on your side of the table, waiting for you to reach over and claim it. The bank will waive the fee if you ask. The surcharge can be avoided if you know your options. The energy assistance, the drug cost cap, and the premium programs are fully funded and waiting for you to call. The IRS penalty can be waived if you file. The investment fee can be cut if you demand a straight answer. And the probate fee can be eliminated if you fill in one simple line on a form you already have. But not a single one of those things happens by itself. Nobody removes a fee out of generosity. Nobody sends you a refund for money lost to a rule you never knew about.